Hello everybody and welcome to Project Trade. This is the Trading Highlights Show. All of the moments that matter from our testing of trading strategies. Today we're on a little known technical trading strategy called the MACD double act, aka the MACD duo dual strategy, aka the profit leveler. You get the picture. And the entry signals of the strategy are solidly based around one indicator. Can you guess which one? It's the moving average convergence divergence indicator. The MACD D. That's right, it's that two-line oscillating histogram which most traders with any sort of technical focus I would say are familiar with. That's what it looks like with all of its typical components and default inputs. The blue line we can see, that is called the MACD line, and it is calculated by taking a 12-period moving average and subtracting from it a 26-period moving average. Then the yellow line is known as the signal line, and it's a 9-period moving average of the MACD line. The histogram is then merely the difference between the two lines plotted with that zero level crossover. That's the basics. If you're not familiar with the MACD, then that explanation probably sounds very rapid, and if you are familiar with the MACD, it probably sounded like it went on forever. But for both you types of people alike and everybody in between, we have done a more detailed video on the MACD, which will be linked in the video description. For now though, let's talk about entry criteria for our strategy. The first part of the double act is our standard MACD histogram with the default inputs. That's going to be our filter on the markets. So if the histogram value is closed above zero, then it'll be just buy trades for us, and if it's closed below zero, then only sell trades for we. Fairly simple. Then the second part of the double act for our main entry indicator will be honing in on just the MACD line. That's the faster of the two lines in the oscillator, and we're going to make it twice as fast as it is on its default settings. That means it will be a 13-period moving average being subtracted from a 6-period moving average. When it crosses above the zero line and closes, we'll enter a buy trade and then swap that for a sell signal. We'll get in when it crosses below the zero line and closes there. And that's why they all call me the multiple MACD magic magician man. Well, they will. Either way, we can't just enter the trade and leave it there. We will have to do some money management. And with that comes the use of a handy money management indicator, the average true range. That's the ATR. It's a single line oscillator measuring price volatility. Essentially, it's trying to measure the average high to low price range of the candles in the look back frame. For us, that will be the default 14 periods. The indicator will give us the average true range value as circled in the top right hand corner. Once we have that ATR reading, we can then think about how we're going to use it. Something we're going to do right off the bat is split out one trade into two trades. That way we can use different risk management for different parts of the trade. Subtrade A will have a stop loss at 3 times the ATR value from our entry price, and that's with a take profit level at 2 times the ATR value from our entry price. We're doing that slight difference there to effectively try and beat out the spread. Then subtrade B will have a stop loss at once again 3 times the ATR value from our entry price, but there will not be a take profit. Instead, it will be a trailing stop loss, which will take effect if we get 2 times ATR value into profit. It won't start trailing before then, so unless it gets to that stage, it will just be that standard stop loss in place at 3 times the ATR. Each of those sub trades will bear a risk value of 0.5% of our money, meaning that each trade in total will risk a maximum 1% of our capital. That should mean that we don't lose too much, even if the trades do end up going really badly. Another trick we'll use is that we will also close down the trade if our MACD histogram switches its signal against us. That's the longer term filter. If that moves against us, we will shut it down. But we won't switch it off if we just lose the signal from the MACD line, as that signal might flip back and forth too often when we're in a range. We don't want to be dipping in and out over and over again. So once we're in, we will see the trade through. Those indicators, though, they are going to be used on 2 different time frames. The MACD histogram we're using for filtering will be on a longer time frame. That will be the 1 hour chart. We want a more reliable look back from it. And that means we can get on a quicker time frame with the MACD line entry signal, so that will be on the 5-minute chart. Hopefully we get a few signals from that. So we're only going to trade on one currency pair, and that's going to be the Euro Swiss franc. They often move together in the markets, but how do they move against one another? We're going to find out exactly how. We'll be journaling our trades too, so that we can look back and understand where we went right and where we went wrong. Find out whether or not we need to chuck a couple of extra MACDs into the mix to make it work. The journal will help us see, gives us the vision. Well, there we go. Let's get into the platform and make some trades. Okay, here we are in the charts then, just before 11 o'clock, 10:56 and 10 seconds to be precise. We've got our 2 Euro Swiss franc charts pulled up. On the left is our hourly chart with our traditional MACD default input settings, 12 and 26 periods, and we can see currently well above the zero line, which means it is buy trades only for us. has been coming down a bit in the last hour or so, and we can see all that play out in greater detail over here on the right in the 5-minute chart. Indicators over here, the MACD line, that's the blue line there. We can see the silver 0 level across the middle, and the period inputs twice as fast, 6 and 13 for the MACD line. And so as we're taking buy trades from the hourly chart, we're looking for the MACD to move above the 0 line and close there. And it does look like we saw one recently. In fact, let's check out both these trades, see how they would have gone. That would have been a buy entry right there at the top of this candle. Did carry on for about another 8 or 9 pips at least though. ATR at that point was around about 2.5 pips. Yeah, I think for 2 times ATR to the take profit, even with the spread, I think you would have made it just about. So you like it would have taken profit on subtrade A right at the top and then had the trading stop loss trigger for not much profits, more nearer the entry price. And what about this one just a couple of seconds ago? Well, we haven't seen it play out yet. All we know at the moment is it looks like you'd be in at that candle. Yeah, so right at this candle here about 10-15 minutes ago. So that wouldn't be a profit taker yet. ATR quite wide on that one. So you're looking about a 10 pip stop loss. Should be right towards the bottom here. Have to see how that one goes. But we'll be waiting for a cross and a recross, assuming this hourly chart stays above 0 here with the MACD. While we wait, let's check out the economic calendar, see what events we got. And there's plenty of them to be fair, so let's just hit the bigger ones. Great British Pound, quite a few numbers for them at 9 AM this morning. Unemployment rate at 4.3%, down from 4.5% previous, and beats the forecast of 4.4. So we're looking to keep bringing that down, but not too bad. Claimant count change reflects that as well, negative 14.9 actual against 40.2 forecast. So a decent beat for them there as well. Quarterly labour productivity came in at negative 1.2%. Didn't have a forecast for that, but I would say you want your labour to be more productive, so a higher number would have been better. 0.1% was the previous. They'll want to see those positive numbers resume in the following quarters. 9:45 CPI inflation data month on month from France in the Eurozone. 0.4% actual, 0.4% forecast, and 0.4% previous. Not the best, but not terrible. Certainly not as bad as some other places that we've seen. Still 0.4, a touch high. Then 11 o'clock, well, just a minute ago, we should get this CPI data month on month from Italy feed through. They've got a forecast of 0.6% against the previous of 0.6% as well. And we do get numbers from the Eurozone as a whole at 12 o'clock. Employment change quarterly and GDP quarterly. We'll watch out for those. 1:30 Brazilian Central Bank Focus Market Report. Yes, coming through today on a Tuesday. Usually comes through on a Monday, but we did have yesterday the proclamation of the Republic Day in Brazil. So we have had to wait an extra 24 hours for the report. As the day cracks on though, this is when we get to a more volatile, more volume time. We get the overlap of the European and American sessions, but we've also got US numbers coming through. 3:30 retail sales, core retail sales and retail control. All those month on month coming in. The retail sales month on month, that's forecast at negative 0.1%. Now you might want to see it start creeping up on the run up to Christmas. Be very surprising if it didn't. And in fact, on this one, I wouldn't be surprised to see a beat, maybe just a 0.2, 0.3% actual. We'll see. Even though we're not trading the US dollar, these are the sort of times that we need to watch out for. Could easily drag us in or out of a trade. And even though we're going to follow the technical system through, sometimes we like to know why we're getting dragged in or out of a trade, if there is an underlying macro reason for it. 4 o'clock will breeze past the global dairy trade price index from New Zealand. But then back on the US dollar at 4.15, we've got the Fed industrial production month on month. And then 5 o'clock, business and retail inventories, also month on month. Other than that, we do have a Christine Lagarde speech at 6:10. Even though she is the president of the European Central Bank, she doesn't really tend to have too much impact with her speeches. She makes a lot. And even when we are trading on the euro, I doubt she's going to be talking about anything controversial or dropping any major bombs. You never know though, if it does pop off at 6:10, we will look to the speech for answers, and then it fades off throughout the evening. So as per usual, our main times we'll be looking at between 3 o'clock and 5:30, that sort of range at least. That's when price has the highest chance of trending from that increase of volume and volatility, buyers or sellers, one or the other, stepping more into the market. But for now, we are just waiting for that signal. It looks like your trade would have cracked on if you got into it here. Again, because that high ATR, your take profit from here would be quite far up, past where we can see, I would say, around about 7 pips, so about 70 points up, or only getting to 63.64. Well, that's fine though. Maybe the euro does want to make a move. We'll wait and see what happens. Here comes the push, and you probably would have taken profit on your trade from back here now. Certainly wouldn't have stopped a loss. You take profit around about there, your trailing stop loss will be going. Not a bad trade if you're in it. It's two we've seen this morning on backtests that look like they would have made it to the profit level. Good signs for the strategy. Almost at 20 past 12, and this trend is continuing here. Rue the day that we missed this move. Came on 10 minutes too late for it. Again, that would be your entry. Right now, about 13, 14 pips to the good. You'd had sub-trade A take profit, that's for sure. And there has not been a retracement that would have knocked out your trailing stop loss. You'd be looking at 2 times ATR for that, so about 6.8, 68 points. That one only gets to 57. I mean, maybe with the spread, you might, but I think you'd still be going. Hopefully you're trading this system and you are in on it. Wouldn't that be a treat? Let's catch up on some of those economic numbers. The Italian month-on-month CPI that came in at 11 o'clock, 0.7%, a bit higher than the 0.6%. 0.6 was already looking a little high, 0.7, slightly worse. You don't want to see numbers at that level. How's the Eurozone as a whole looking though? Quarterly employment change, 0.9% increase. Pretty good. Honestly, a good beat from the flat forecast at 0.0. And the GDP quarterly coming in as expected at 2.2%. Seeing a bit of growth. That's the same as the previous as well. Not the worst numbers. And there's nothing really major for us now until 3:30. Those US dollar retail sales numbers. That'll be the big one in a few hours' time. Just after 5 to 1. And this price run has really continued here for the euro. Can see it better on the hourly chart. What a push this is. Gotta say, even if we were in this trade from back here, we only would have got to this area for our trailing stop loss. That retracement there, that would have been enough to get us. But still, if you stuck it out and you're still in this euro trade here against the Swiss franc, looking very nice for you. Does mean for us though that we will have to wait that much longer to get into a trade, because we are going to have to wait for the MACD line to come below zero and then recross. That's still got to happen to get below the zero line first. And I don't think that the hourly chart of the MACD is going to go beneath zero anytime soon. Now look at that momentum pushing up. About an hour on now, we saw price peak off by the looks of about 5 periods ago. Finally, now it's coming down a bit steeper. We want to see that continue. We don't want to see it revert to green and stay in a range up here. Keep pushing on, get that MACD line below zero. There we go. We do get the close on the MACD line below zero. 10 past 2 is the time, and negative 0.000062 is the figure at the close of the candle. Now we can keep an eye out for the reversal. Might just take a few periods. Price really going through a drop off from those highs now. Look at how that's carried on. This latest candle pushing down the pressure. 5 to 3, and the drop thickens. Look at these red candles. This went from one uptrend straight into a downtrend. Bizarre day, no ranging at all. Look at it over on the hourly chart, the size of that red candle. Hopefully it just means a better entry position for us when it does recross above zero. Just after 25 past 3, and we've now seen the first green candle in a long time. Look at that field of blood. We had a very small candle there, and another one back there. But this has continued as a long downtrend, the relentless Swiss franc. Been putting in a shift again. Look to the hour chart, we can see the pullback, and that means that the MACD line is on the rise again. If we get a couple more candles like this, we could finally be able to get into a buy trade, as we're just a few minutes away from those US dollar retail sales numbers coming in at 3:30. Or the first candle at the release of the numbers at 3:30. You can see the big spike in volume, and it has thrown a spanner into the works. The two before that looked like we were going to get pretty quickly above the zero line. Now a sharp red candle has come. Does look a bit less likely again. But what numbers came through? Month on month, 1.7% actual against negative 0.1% forecast. Did think that there was going to be a beat on the forecast, but 1.7, that is a big beat. And it's what the core retail sales come in at as well, against a forecast of 1.7, interestingly. And retail control, negative 1.4 forecast. Those forecasts are all about the place, by the way. 3 completely different forecasts over what should be somewhat similar numbers. Anyway, that was 1.3% against the negative 1.4% actual. So pretty good numbers on the whole. Next up, Fed industrial production month on month, 4:15. Here we go. It's the return of the euro though. And as we roll into the next period right now, we are going to see that MACD line just cross over zero there. And so if it closes that way, if we see another green candle here, or even a little red one by the looks of it, the close will occur. Might not, could see enough of a pullback that we have to wait a couple periods. But now it does seem a lot more likely this entry signal comes. There's the pullback though. It's a close one. It's going to be close. Doesn't look like it's going to come this candle though. It is just shy. No, it doesn't come. We miss out, but it's still poking over now. So as long as another red candle doesn't come, a big red will put it off. But even a small red would see us through on this signal once and for all. We are going to miss it again though. It is going to stay flat on the MACD line, still below 0. Stay patient. Well, the MACD line the last few periods was really hugging that 0 line. Now it's looking like a very good thing that it didn't cross over there, because price in the last period has plummeted down. It's hit new lows, and we certainly don't look any close to a signal now. Hopefully it just means a better entry price for us when we do get in. Here we go, return of the MACD. We are going to see the line cross over the 0, poke its head through once again, very narrowly through. Doesn't look like it'll make it this candle. We have had 4 straight green ones. We'd need another one to see it in, that's for sure. Those Fed industrial production numbers that came in, month on month, 1.6% actual against 0.3% forecast. Good figure there. And it puts the year on year at 5.1% actual against 5.3% forecast. Bit of a miss on the latter, but not really by much. 30 minutes, we got those inventories, business and retail. Well, it looks like we are finally getting the signal, which means we can look to the ATR, 4.1 pips currently. It's a high volume time of the day, hence why we've got this increased ATR reading. 3 times that value of the ATR to our stop loss will be 12.3 pips. You can see how our risk is calculated on the screen. It's going to be 0.21 standard loss as we do get the confirmation, and so we can enter 2 buy trades just like that. And so it was 3 times ATR to the stop loss, that's 123 points, and just 2 times ATR to the take profit, that's for subtrade A, so that'd be 82 points. You can see both those levels on the screen now. And for subtrade B, it's the same stop loss, 123 points, but it's got that trailing stop loss this time instead of the take profit, and so we're just going to set that at 82 points, 2 times ATR, so that'll kick in if we're able to take profit. And it does mean we've got a bit of room with the trade. It can come down without any serious danger, and it would have to get to a new low for it to actually trigger the stop loss. It's right at the bottom of support level. Bounced off there around about 10:30 this morning, and then again just about 30 minutes or so ago. And our take profit isn't above the high of the day, so we're not asking for new highs. It's quite a bit of the way off there actually, so it's possible. We don't feel too bad being in this trade. We've waited a good portion of the day, and we're entering in at that high volume, high volatility time. So I think we could see a retracement, but hopefully not enough to get our stop loss kicked out before the trend continues and we eventually get a take profit. Almost 30 minutes into this trade and not really much movement on price. Been very rangy since we entered, just a couple of bucks down on each trade. Not too worried, although don't want to see it break down obviously. On the economic calendar, the global dairy trade price index did come in at 4:41 p.m. 1.9% actual against 0.4% forecast. Those dairy trade prices on the up and up. And then the big 5 o'clock US numbers, business inventories month on month, 0.7% actual against 0.6% forecast. Not too much of a difference maker there. And then likewise on retail inventories month on month, stays at negative 0.2% to match the forecast. And we've just seen the MACD line close beneath 0. We're not letting that signal invalidate our trade though. We don't have to close it based off that information. Be interesting to see how that turns out. Will the price makes a beeline for the stop loss, and eventually we're worse off for not closing out the trade, or whether it bounces to the green side and we would end up effectively being back in another buy trade up at the top. See what I mean? That MACD line is about to close above 0. That means if you used it as an exit signal for the crossover there, you'd have just been right back in a buy trade here at a worse price. On to 20 to 7 now, about an hour on since the last update, and price are very much ranging for us in the profit zone, which is what we want to see, but really nothing much to report other than that the trade is still going and we're about $5 or $6 up on each of those sub trades. 7:45 now, and again not much in the last hour, price still ranging. In the grand scheme of things, we have seen higher lows occurring, potential for a breakout in our favor, but a lot of the volume that was there in the market around about the time we entered and just before has since faded away. Haven't seen the MACD line cross over 0 in a good while either, but it has been right next to it for a good while. Just after 8 o'clock, and this is incredibly close to our take profit level. Just needs a few more pipettes to get there. We see the trading stop losses kicked in, so that should have been at the exact same time as the take profit kicked. These are 1 pipette off, so that might be making the difference there. But that is a good start to have the trading stop loss. We just want that to roll over a couple more pipettes. There we go. That's the take profit. We are in the money for the trade, in the money for the day. We waited for our moment, but we did take it. And now 3 hours, 20 minutes later, take profit on sub trade 8, but we've still got sub trade B going. The worst that can happen with that is our stop loss triggers where it is now. And that looks like it would be for a couple cents worth of profit. Pretty nice. Hopefully we can get more out of it. Again, it's got a wide range, 2 times ATR, or 2 times the big ATR from back when as well. So it does have that margin for retracement. Crack on. Here's a big red candle coming though, right on the cusp of 9 o'clock. It is gearing to knock out our trading stop loss here, which hasn't moved since we got in. And it does go there. What a sharp candle. Came out of nowhere. It looked like we were doing okay. This candle had come close, and we felt like we dodged a bullet when it got away like that. But the drop is in, and our trade is over. Only managed a 23 cent from that one, but certainly better than a loss. And we were pretty lucky, we feel, to get out right at the tippy top there. Couldn't get much higher, but nevertheless, we are going to call that the end of the day. $18.73 for profit in the end. We don't mind that, and we will be back tomorrow to trade it again. Just before we go though, let's check out that trade in the journal. There it is, and as we know, 1 winning trade, 0 losing trades. If we managed to get in that one right before we came on the charts, that likely would have been a winner as well. So things looking up for the MACD double act. $18.73 was the number. That takes us from $5,677.39 to $5,696.12. We're pretty happy that we stayed in the trade. We had to give it a wide stop loss to make sure that happened, because there were a couple of retracements in there that definitely could have knocked out a tighter stop loss. And also what was pretty crucial was not closing down the trade for the MACD crossing the 0 line. That would have led to a losing trade, and a lot of these profits, all these profits I imagine, would have been completely demolished. Still though, we can leave today with our head held high, and we can see what food and shelter we can get for $18.73. We'll be back tomorrow for more.